Hey everybody, welcome to the channel. And if you're a first-time home buyer, make sure you go check the playlist section and see Guiding Your Mortgage, Learn Mortgage in an Hour. That's going to teach you everything I would want to know if I was a first-time buyer and didn't know any of this myself. So topic today, I know so many people are saying, they think they want to wait until rates come down because, theoretically the monthly payment could be less burdensome. But there's a problem with that math, as I pointed out in my last video. And then on top of that, it'll be even tougher for people who have low down payments. Let me tell you what I mean by that. Okay, so when rates drop, home prices rise. Just look what happened in 2020 and 2021. Okay, you see this chart here. This is Redfin data showing each year's median sale price from January on the left all the way to December on the right. This red line is 2020, orange line is 2021. You see a lot of home sale, median sale price growth there. And then you also see it increase from 2021, the orange, to 2022, the black. Middle of 2022 is when rates really started to shoot up. And so they leveled off as in comparison to the 2021 numbers. And then you see this past year, 2023, they've pretty much also been flat in comparison to 2022, even though rates have still kept on going up. Okay, so just basically people are willing to offer more on the purchase price when the monthly payments and the rates are lower. Okay, so when that happens, these bidding wars ensue. Okay, and people are making contracts for homes that won't appraise to the sales price listed on that contract. Okay, when you buy, you have to get an appraisal to make sure that the value listed on that sales contract actually matches up. Okay, and appraisals are based off of what similar homes in that area sold for in the past 6 months. Okay, the value of your home is judged on homes that were sold before the rush, before the bidding wars. Okay, it takes time for home sale data to catch up. Now, if you have a large down payment, you can get away with the home not appraising. Okay, just check my appraisal results video as a refresher. But for example, let's say if you have a 10% down payment on a $500,000 home, and it only appraises for $475K. Well, by lending laws, the mortgage company says that you're still going to have about 5% equity, and you can make that work. Okay, now you can buy a home for yourself with 5% down equity per the appraiser's professional opinion of what the home is worth. In almost all cases, you can get away with just having 5% equity. But if you have a 0 to 5% down payment on that same $500,000 home and it appraises at $475,000, then you'll almost surely have close to either zero equity on the 5% down structuring that was originally laid out, or you'll have negative equity if you structured that as a 0% down deal. Okay, so in that case, you're SOL. I mean, maybe you could get lucky with your 5% down loan and move to a 0% down loan, but you'd almost positively have to be a first-time buyer, and several other things also have to bounce in your favor. An appraisal contingency now could save you if the appraisal value comes in low, and then you can get out of the contract or get the seller possibly to agree to a lower sales price to make the deal work. But on these bidding wars, those appraisal contingencies are almost always waived. Okay, you end up almost never getting that if other buyers are going to waive it. In real life, agents know, okay, not even to put these low down payment offers on homes with bidding wars. Okay, especially if the agent, the seller agent, signals that there's already been offers made on those homes with much higher down payments, something around at least 10, 15, 20%. Some people even will put 50% down. Like they're really not even going to waste time putting an offer on for you, because when the similar comparable homes in the area have sold for far less than what the home is going for, they know that the home won't appraise and your loan structuring won't work out. And so the high down payment is the only cure in a lot of cases for the low appraisal. Okay, the sellers and the listing agent are going to take the offer with a higher down payment over yours. Look, first timers buy with 0, 3, 5% down very commonly. I probably see the most common occurrence, in my opinion, is like 3%. 3% is close enough to 5% on the monthly payment and interest rate and mortgage insurance usually. And 3% usually doesn't have the interest rate increases or the restrictions or drawbacks that the 0% down loans have. I could poke so many holes into this, let's wait for lower rates theory, but it's just always going to make it more expensive in the long run when you look at your long run cost of owning the house. Again, check my last video and check the home affordability video I have for you. I know, guys, you don't want to see a higher rate compared to what people used to get in recent years. Those recent years, interest rates were really an anomaly. I mean, we were still coming out of the mortgage crisis from 2008. Rates were super low. They were in the 5s and 4s, after 2009, 2010 for a long time. It came down, these 3% rates during COVID, it's just, almost just such a low possibility of ever happening again. There'd have to be some other calamity or ridiculous event for that to happen again. I mean, people bought homes in 1986 at 13%, and they brag about that, and they're happy, and they know that because those rates were high, well, after they came down, their home value appreciated, and they didn't want to take on purchasing a home with a larger purchase price and then a larger balance at that point. Okay, like waiting is going to delay your retirement. It's going to cost more on the monthly payment. And, this is a short run sacrifice. Look, law students do this. Okay, they go to law school and they do that. They're, not living like kings for the first couple of years of that, but they do that to delay their gratification and know that they're going to get in a better financial situation after that in the future. I mean, look, guys, interest rates just do this over time. They go up and down and up and down. And on these downs is when everybody catches, those rates. So these people that are buying at 6, 7, 8%, at some point, when it starts to dip again, everybody's going to catch that wave. Okay, so it can then go down again, lower than that. And then pretty much most people are then going to try and refinance down into that point too, if it makes, sense for their long-term financial situation. But because I'm saying that, like a lot of times everybody ends up having a very similar rate on their home after the refinance wave. But what's not similar is the home price that people buy these homes at. And the longer you wait, the higher the home price gets. Okay, you can always get down into a lower refinance, assuming you can still qualify for the payment then. But, this is how it works. But guys, I hope that made sense. It's just, I see a really difficult time being able to win an offer on a home if you have a low down payment and you have these bidding wars again. I mean, 2021, everybody was coming to me being like, Ben, man, I can't get into this home because everybody's overbidding me on this price and just doesn't make sense to me. And I can't make it work out. And the low down payment people suffered the most during that time. But guys, I hope that made sense. Drop your questions in the comments. I'm happy to talk this out with you whenever, and I'll see you on the next video. Thank you.